Welcome back. This is Niaga AWANI with me, Ibrahim Sani. Very recently, Etiqa, the insurance and takaful arm of Maybank Group, has launched its first environmental, social and governance fund, or ESG fund, that will appeal to investors looking to invest in companies whose activities are linked to sustainable investment themes over the period of a medium-term and a long-term period. They said introduction of the Premier Global Sustainability Equity Fund, or PGSEF, is in line with the company's own sustainability journey, which began in earnest in 2019. And of course, this encapsulates the idea of sustainability statement, which lays its ambition in growing the engagement of its clients, stakeholders and partners. PGSEF is the latest fund offering that Etiqa is offering to individuals that can invest through an investment-linked plan such as Dynamic Invest, Smart Wealth and Smart Flexi Plus. The plans are underwritten by Etiqa Life Insurance Berhad and are available via Maybank. The fund is managed by JP Morgan Asset Management and Natixis Investment Managers International. So joining us is Chris Ng, Etiqa's Chief Strategy Officer, on trying to unpack the PGSEF fund, why they are heading in this direction. Chris joins us live via phone. Chris, let's talk a little bit more about the future of ESG funds. Why do you feel that this is a direction that Etiqa is going into?
Okay, thanks and morning, Ibrahim. I think there's a couple of reasons. The first is the growing awareness of sustainability and the need for sustainability around the world. Of course, this has come up earlier in countries within Europe and the US, but it has also been spreading very rapidly into Asia. And over the last 2 to 3 years, we can really see the awareness, particularly among the investment community in Malaysia, come to terms that ESG is the way forward, whether it is due to growing recognition of the impact from climate change or recognition of greater social welfare that is needed within the corporate sector in Malaysia. So as that awareness has increased, we have also seen the corresponding inflow of funds into funds that are managed from a sustainability angle. And because of that greater concentration of money within ESG-linked funds, we have seen both outperformance because of demand for such products, as well as from better underlying performance by the companies that have good ESG credentials.
You're saying better underlying performance. Does this mean that ESG funds tend to bring better returns as opposed to non-ESG funds?
Over the long term, we have seen that. I've been tracking this since 2012. So we actually do see, especially in terms of, in times of market volatility, you actually do see the outperformance by ESG funds. Now, admittedly, over the last couple of months, since the start of this year, there has been a reversal of this outperformance because the issues and the circumstances surrounding the Russian invasion of Ukraine have led to a rally in some of the commodity stocks, when some of these commodity stocks are not included within the ESG funds. But we think this is a temporary phenomenon. We think as markets normalize, there will be a long-term outperformance and a return to outperformance to the ESG funds again.
Looking at the broader economy with interest rates rising globally, do you feel that investors have priced in some of the hike that is being introduced by many markets right now?
Yes, I actually do. I think that in a way, the US Fed has been slightly behind expectations and movements in the market. So what we have seen in 2021 was that the market was expecting the Fed to hike, and the Fed was a little bit slow, and now it has caught up. And now the Fed is signaling that it could still be aggressive, while I think most people looking at the potential for recession have started to pare back expectations of the aggressiveness of the rate hike from the Fed. So I think, in a way, the market is moving ahead of the US Fed nowadays.
Chris, again, you touched a little bit just now about Ukraine. I want to touch more on the broader risks that are affecting the markets right now. Inflation is actually quite high in various countries. In the UK, it's 9%. Malaysia apparently is 2 to 3%. However, I doubt those numbers are real. There's also supply chain disruption. There's also a lot of other issues like wage issues being impacted, and of course, rising unemployment. It seems like we are stacked against various risks. How do you see the market's going to perform in the near term with all these risks abound?
Well, of course, markets tend to be a little bit softer in the middle of the year. This has traditionally happened regardless of the background economic development. And really what we see in terms of inflation now is a cost push inflation stemming from, of course, the conflicts in Ukraine and some supply chain bottlenecks. We do see this situation easing in the third quarter. And, we will need to, of course, observe closely how the conflict in Ukraine materializes and progresses. But nonetheless, as and when markets are soft, that is the right time to enter the markets. We've always said that it's time to be, it's a famous saying, of course, it's time to be greedy when others are fearful. And fear levels are relatively high right now. So this is the right time to enter the market.
Okay, just to tie in back to our statement just now, our conversation just now with the ESG fund that Etiqa is doing, knowing that investors are pricing in this price hike, knowing that the risks are there, knowing that we got to be a little bit more greedy when the times are a bit soft, the market is a bit soft, how do you see funds like yourself, and try not to supersell your own fund, Chris, but honestly speaking, how do you see funds like the ESG fund is going to perform over the medium term and long term?
Well, in terms of fund performance, like I said, there has been a slight underperformance of the ESG fund over the last couple of months. So there has been a correction of that premium over non-ESG funds. And as mentioned, it's the right time to enter. Nonetheless, of course, ESG funds, I've always touted it as a long-term investment. And really, the so-called greater or the less volatility compared to non-ESG funds, that's what attracts me. And as the global economy gradually moves towards a more sustainable future, as it moves towards electrification and the green economy, these funds will naturally outperform. So over a 12 to 3-year horizon, I still strongly believe in ESG funds, and even more so in the longer term.
Finally, Chris, let's talk politics a bit. The conversation of politics is in the air. I met a few government officials over the earlier part of the week. I met some business leaders, open houses, Khazanah open house, you name it, right? MDV, you name it. It seems like there's nothing else to talk but politics. Where do you think the political risks stand when it comes to impacting the markets?
Well, unfortunately, I won't be able to comment much. All I can say is that markets always prefer stability. So as the environment stabilizes, whether it's politics or in terms of external affairs, then we can see a greater performance in the market.
Okay. I'm going to make another phone call to you off air later after the show, and we're going to talk about politics after that. Okay, Chris?
Thanks, Ibrahim.
Thank you very much. That was Chris Ang Po Yoon, the Etiqa's Chief Strategy Officer.